Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on June 20th, summer solstice today. Hope you have a good start to official summer. In terms of the market, honestly, not much has changed. And really, the evidence hasn't changed. There's been a lot of news, there's been a lot of headlines, and the market has, held up pretty well among some uncertainties and stuff like that. But at the end of the day, nothing's really changed. There's definitely more good evidence than bad. The intermediate term trend is up. Growth is outdoing defensive stocks. Interest rates are under control. And really the big picture setup to me is the biggest positive. The first 6 months of this year has really almost been, even back to December, like a top, obviously a huge correction, a little bit of a bottom, blast off indicators. And now about a month really for most stocks of pretty tight trading in there, okay? And even among individual stocks, there's been very little abnormal action at this point. Obviously it can always show up, but to this point, when there has been selling, it's usually been out of strength. The stock's had a big run, it gets hit, but it sort of pulls back to some moving averages and finds support. On the flip side, as we've been saying, to me, leadership isn't fully developed, especially with growth stocks, but just not a lot of stocks hitting new highs, not a lot of, quote, traditional breakouts. And a lot of the things that are hitting new highs are sort of, I don't want to say speculative, that can mean bad. I just mean they're not, what I would say institutional liquid leaders. They tend to be either completely speculative or just, very, very fast moving sort of quote unquote in play stocks. So we'll see how it goes. If we do get going here, market holds up, we get going in the next week or two or three, I think there could be a lot of sort of fresh breakouts and follow-on buys from stocks that are already, leaders that have tightened up. But we just want to wait to see it. In Cabot Growth Investors model portfolio, we probably put, 10 to 15% of the portfolio to work each week for a few weeks. But in the last couple of weeks, as the market has kind of sat there and most stocks have kind of sat there, we've also sat there. We did a little bit of buying, but we're still about 28% in cash. Like I said, if we get going, we could get toward fully invested pretty quickly, but we just want to see it happen first. I don't want to anticipate it, and then all of a sudden there's a month-long correction as the Middle East gets worse or something like that. So we'll see how it goes. Right now, I'm leaning bullish, but just still want to see more before really flooring the accelerator. Okay, let's hop into the charts. As usual, I'm using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. So you can see the NASDAQ, the big cap indexes have sort of pushed higher here a little bit before consolidating here during the past week as the Middle East uncertainties have flared up. But overall, again, as I keep saying, there's a lot of daylight here between the 50-day line and the NASDAQ. So we could pull back there. How we pull back, if we pull back, all that stuff is going to factor into and tell you the kind of the strength of the market. But the bottom line is the intermediate term trend is up. S&P 500, pretty similar picture. Just toying with this sort of resistance area or whatever you want to call it, toying with the 6,000 level, but not quite able to get over it. Even today, it's early as I record this and it's quad witching and all this stuff with options, but there's some room, there's some news that they might negotiate. The market kind of opened up, but it immediately kind of came back in. So we're just kind of hanging out here for the moment. The broader indexes are, I don't want to say weak, but weaker. Small caps and mid caps, yes, but even if you look at something like a nice setup here, but just hasn't really gone anywhere. Even if you look at something like the RSP, which is the equal weight S&P 500, this is really what most stocks look like. It's, if you own 10 stocks, yeah, you probably have 2 or 3 that may be hitting new highs every few days or something like that. But you probably have 2 or 3 that are kind of a little bit iffy, and a lot are in the middle. It's just that kind of environment. But you can just kind of see we've just been sitting here really since mid-May for the average S&P 500 stock. It's a great setup. Like I said, a couple of big days on the upside, big volume. You could really sink your teeth in, I think, a lot of indexes and a lot of stocks, but you just want to see it. You don't know, maybe we come in next week and we're down here. The market has a way of sort of looking good until it actually does it, though. You can't really count on it. Same thing, not to keep repeating myself, but IPO Fund, is it bad? No. Is the trend, intermediate term trend up? Yes. But has it gone anywhere in the last month? No. And it just, it's kind of stalled out a little bit here. IBD 50 index, same sort of thing. A little bit weaker, but just kind of consolidating in here. So everything looks fine. It's just, not to use the same analogy, but it's like the football team's going down the field. You feel good. They're making first downs. They're in the opponent's, 20-yard line. You just want to see them score a touchdown. That's kind of what we're waiting for here is, can we score a touchdown in the market, okay? Last but not least, before we get into individual stocks, I'm still encouraged by the fact, and I know there's other other factors like the dollar and interest rates and all this stuff. But XLP, there's been no move here. So I do think the odds favor the next big move being up, for sure. And I think the odds favor even the next intermediate term move being up. And the fact that we still really just can't even see any move into defensive stocks, even with some of these supposedly, bad economic reports, obviously the Middle East, rising oil price, all this stuff. There's no desire to buy toothpaste and toilet paper, which I think is a good sign, okay? The other thing I want to show, sort of on the other end of the spectrum, again, this is XLF. Is it doing anything? This is the financial ETF. Is it doing anything bad? No. In fact, I would mention that today, JP Morgan, which is kind of like the, be all end all. But I just thought, this is hitting a new high. But I do find it interesting that XLF, which is big banks, is, and, as an old, student of the market, you do keep an eye on the big, financial institutions. It is underperforming here, which isn't super surprising given that the market's been, the S&P 500 has been strong. But it's, you'd like to see a little bit better relative strength. What I do find interesting, though, is the IAI, which is a fund for kind of the broker, it used to be called the broker-dealer index, basically. So Goldman Sachs, Morgan Stanley, as well as like a Robinhood or a Coinbase, but mostly the, S&P Global, things like that. Really tied to the market, is showing some relative strength. So that's a good sign. So not to play both sides of the fence, but it's a mixed picture is what I'm trying to say. In the short term, we're just kind of sitting there with most stocks. We're handling the news well. And if we had already seen everything break out and we'd handled this and some things pull in, I'd be very bullish on the pullback. But we just want to see leadership, in my opinion, get a little bit more fully developed. Okay. That's enough of that stuff. Let's get into stock. So just sticking with the financial theme. This one's not going to make you rich, but this is Charles Schwab. I think I've mentioned it on this video before. So obviously it's not, it's not new and dynamic or whatever, but I do find it interesting. Number one, very good projected earnings growth and current growth, by the way, which is kind of interesting. Number two, it was smoke up a chimney right off the market bottom. Had this tight area, a little bit of a shakeout. I remember looking at it a couple days ago. I was like, oh, well, it looks like Schwab is going to come down. Nope, it was just a shakeout, and now it's actually probing higher. I do find that kind of interesting. Elsewhere in the group, Interactive Brokers, not as good growth profile here, but it has been it was a great winner here during the last cycle. Obviously, very much an accelerated uptrend here. Got killed during not killed, but hit very hard during the correction, and it has come back, and you can kind of just see here, you'd like to see a little bit more conviction on the upside. But with that said, it continues to hold up in here very tightly. And this is just one of many names where 2 or 3 good days, not like one good hour, but 2 or 3 good days or, a really strong volume move on the upside could be like, hey, this thing's breaking out on the upside and it's worth a risk. Right here, it's still consolidating, okay? Kendrill, KD, this one is more of the sales growth isn't there, so it's not like my prototypical name, but it's sort of I believe this was the spinoff that has, a lot of earnings growth coming right here. You can see the next couple of years. And certainly it's worked its way higher. So it's in a general uptrend, nice consolidation, nice comeback. And again, what do you see here the last month? Just very tight trading in here below 42, call it, or whatever. So ideally, maybe it needs a little bit more time. Maybe it shakes out first, but you'd like to see some sort of powerful breakout on the upside. In terms of potential, pullback buys, this is Duolingo. I might have mentioned this last week too, but DUOL. It does have a history. The tricky thing with this is it does have a history of, even beyond stuff like this, it has a history of, just that's a very, tedious correction. I don't know how deep, but probably 30% deep. Obviously, it got hit this year. So you don't know if this is going to, come down to 400, which would be another 20% or whatever, and then, ramp higher again. But with just going with what we see now, there's been some volume selling in here. And there is a little bit of it fell out of this tight area on the downside, but it is approaching the 50-day line. And in theory, this area, the prior high, the high of the earnings gap should be pretty good support. So it's kind of interesting here. You make the decision, maybe you buy here, maybe you do nothing with it, maybe you wait for a rally above whatever, something like that. But overall, it's a leader that's intact, that's pulled back, hasn't done anything wrong in the intermediate term, but worth watching, okay? Interestingly, so chip stocks, I'll just mention, here's the chip index. A lot of this push higher recently was from names that weren't at new highs. There's not a lot of chip stocks at new highs, okay? And that's okay. It's just, again, we're seeing a lot of stuff sort of off the bottom. I am sort of intrigued It's a little wedgy in here. This is NVIDIA, obviously NVDA. It's a little wedgy in here. Sometimes you get a shakeout. There's old resistance. But I think I've mentioned this before where it did shake out below this prior low, which kind of resets the count. Moreover, not just that, it just hasn't done anything since last June, basically, give or take a few points. So it's been almost a year where NVIDIA hasn't done anything, which is, and it had a big correction and shakeout, so on and so forth, a couple big corrections. So, it's kind of enough to reset the advance. Now, is there enough juice for like another move higher? We'll have to see. But I would just say, big picture, I would just say this looks like a new base, big volume buying support at the bottom. I wouldn't say there's a great setup here, but if we could set up here, really get going, market gets going, so on and so forth, I think NVIDIA not just joins the party, but could emerge as a leader again. A lot of ifs and buts, let's see how it goes, but I am keeping an eye on it. Like I said, though, some of these names are sort of more off the bottom. This is Allegro Microsystems. You can see on the weekly chart, it's been the dog's dinner for a while, even hit a new low during the correction, okay? But it has it snapped right back, and now it's hitting whatever, I'm going to say 52-week highs, I don't know exactly. There's a few stocks in here, chip stocks, that if you look at the numbers, let me go back to the weekly, you can just see all this red here. Business has been bad, or shrinking anyway. Profitable, but shrinking. But they're expecting a turn up here going forward. There's a few names like this. Silicon Labs is another one, SLAB. Kind of similar, didn't get hit quite as hard, but kind of a nothing burger here for a year or two. Got hit. You can see some nice volume clues here recently. Same sort of thing. This, earnings and sales have turned up here, and they should continue to turn up. So you're seeing some of these almost like chip turnarounds as opposed to, leading growth stories in the group, doing pretty well, okay? Elsewhere, sort of in the loosely the AI field. This is Credo. I mean, it's hard to do much with it. It's very volatile. It's come back all the way here, but it did have this little handle in here. It did hit a higher high last week, pulling back today. We'll see how it goes. You'd like to see some of these things that are so volatile, you'd like to see these quiet down while maybe some of the ones that are quiet now break out. That's kind of how a bull market usually rolls. ALAB or Astera Labs, ALAB, you can just see selling here at 100. But overall, let's see how it goes. Today, like I said, there's some options, big options, expiration, futures, all this stuff. So it can kind of mess with some of these stocks, but just something I'm looking at as one of these low-level plays, which have been working. So if you get kind of a decisive breakout, maybe it can trend. I'm mentioning Marcato Libre. Listen, it's a $2,400 stock, which I don't really care about the price, but even to me, that's kind of high. Just, usually these things are lower. But with that said, it's got the sponsorship. It's got the numbers. If the stock was 200 or 100, it would definitely be, looking pretty good here. International in an overall uptrend, and the stock, zoomed to new highs here, and you can just see on the weekly chart a nice, pretty calm pullback, a little bit of selling, but pretty calm pullback here into the 10-week line, 50-day line. So that's kind of interesting. Life 360 is sort of the other end of the spectrum, a little bit thinner, can get tossed around. But overall, I just like how it's been. It's basically marked time here for, again, a month, 5 weeks, as some moving averages catch up. Certainly room, certainly daylight, kind of like the major indexes, to correct if it wants to. But pretty interesting story and pretty interesting chart. C Limited, another international name, China. Again, this is some of these things where, is it a little tedious here? Has it done anything net the last 5 weeks? No. There's a lot more stocks like this than the ones that are everyone, people talk about the ones shooting higher. So it's just kind of sitting here, but has it done anything wrong? No, it's just kind of pulling in toward the 50-day line, which in theory should be supported here. Of course, we'll see what the market does, but SE still looks pretty good. And then just a couple of, tight areas. So this is VEEV, which gapped on earnings. And, on the weekly chart, again, this isn't the most dynamic name, VEEV. But you can just see on the weekly chart, very, very little selling. Volume's been drying up on the weekly. Today this week it's like a dot, which I like to see. Now, tight is good, tight is right, as I like to say, but it's tight is sort of a setup. Then you want to see the buying. Okay, so let's see how it goes. But so far so good on VEEV. Snow, sort of same thing. Snowflake. You can just see how it ramped up here a bunch of weeks in a row. You had a big, earnings reaction. And then it's just not much going on here the last couple of weeks, which usually is a pretty constructive sign. Sports, same sort of thing. AS, still a little bit extended, but again, it just rushed went from 20, it almost doubled from the lows to the post earnings gap. Didn't quite. So, I mean, you're probably going to rest after that, and it is resting. There's been, there's been a little selling. I think there was a share offering or something, but overall, just kind of chilling out. That looks good. The other thing I want to mention is commodities, and it's not just oil. It's oil with Iran and the Middle East, but this is FTI, which I've always been keeping an eye on it, and the reason is because this is the OIH, okay? So you can see what this looks like on the weekly chart, and then it got hit, obviously, with the tariffs, okay? And then you have FTI, which has been holding up and is now actually hitting new highs. Okay, so I find that pretty interesting, especially in a group that's so bad. We'll see what happens. I'm sure it's going to be news driven here with oil prices and stuff like that. But even outside that, you have natural gas, which is not really tied to the Middle East at all. I mean, tangentially it is, but here's EQT, which is one of the big ones, breaking out to new highs. Expand Energy, which used to be Chesapeake, moving out to new highs here, and this one had already moved out to new highs, so a little bit stronger. Some fertilizers, I've mentioned Mosaic before. Here's Nutrien, kind of spiked up here, it's pulling back. CF Industries was another one. You can see a big run here, pulling back a little bit the last couple of days, but certainly a nice run and some buying power here. They'll all be news driven based on the Middle East to some extent, but there are some more, after sitting out the dance really for the last 2 years at least, really they topped in mid-2022. Some commodity names and groups are looking a little bit better, okay? Back to the market, we'll just see how it goes, all right? Maybe, it wouldn't surprise me if the market pulled in here next week, no matter what happens in the Middle East. Maybe things just need to pull back. We need to shake people out. It's been a little quiet here recently. But so far, so good on the market, intermediate term trend, all the evidence, that sort of thing. I don't want to keep saying the same thing, but it really hasn't changed for the past month. We now have some tightness. We have some setups beyond the big picture setup. We have some setups here in the last few weeks. Now I would just like to see some more of these names, initial names, break out, and some of these names that kind of already broke out and have calmed down here for a few weeks, kind of add some secondary buy points. If we start to see that, en masse, it's going to be a great sign for those stocks and for the overall market. Until we see that, I'm not saying we're going to come back down here, but I still think, there's a chance that the short term could easily see, some sort of pullback and shakeout action, whether it's news driven or not, as the fear level gets ratcheted up. So let's just see it how it goes. Overall, definitely more good than bad out there. But for me to get really, cannonball into the pool, I'd like to see a little bit more upside ahead. Okay, that's all the time I have for today. Thanks for listening. And be sure to come by again next week for another Cabot Weekly Review.